We are back here on the channel, Survive and Thrive. And today I wanted to focus on what happened on Saturday. And as you can see in this article, and that's Warren Buffett's annual shareholder letter, as well as the focus on the 4 giants and his investment portfolio. So as you can see in this first article, Markets Insider, Warren Buffett calls out a spike in deceptive earnings, bemoans a lack of bargains, and trumpets Berkshire-Hathaway's 4 giants in his shareholder letter. Warren Buffett published his annual letter to Berkshire-Hathaway shareholders on Saturday. The investor bemoaned a spike in misleading corporate earnings during the stock market boom. Buffett also touted Berkshire-Hathaway's scale, tax payments, and the 4 giants among its businesses. And so I've done some further research to find out exactly which holdings these are, and I will dive into that in more detail later in this video. So that was a big focus of his annual letter, is that he believes that there are a lot of corporate earnings with the deceptive adjustments happening this year, and so it's created a lack of stock market bargains. And I see further downside for a lot of these companies, especially with the amount of volatility, and creating some opportunities for investors for the long term. I really wanted to focus in on this last part of the article that I'm going to touch on, and that is Buffett singled out the 4 giants that account for a big chunk of Berkshire's value. And so I really want to take my best guess at what these could be. And one way to do this is to jump over to a quick Google search that I had done. So let's go take a look at that now. A great aspect of Google is that you're able to find almost anything. And so here are the top holdings for Berkshire-Hathaway, Warren Buffett. And this was reported to the SEC on the 14th of February 2022. And these are holdings as of December of 2021. And you can see here that there is a list of overall holdings. If you go to this website, you can actually get a complete list of all the companies that Berkshire-Hathaway is invested in, with the associated market value, number of shares, and percent of the total portfolio. So as you can see at the top of the list, it's Apple Incorporated, ticker symbol APPL, and this represents 47.6% of the overall portfolio. The number of shares, 887 million, with a market value of $157 billion. So quite a significant buy-in. And I know that Warren Buffett is a big believer in Apple and what they've been doing over the years. And you can see here that just with the acquisition that they made in 2018 for $36 billion, that it is now worth, as of January 4th, 2022, more than $160 billion. And that's just at 5%. And you saw from that previous list that they're over 47% of their portfolio is staked in Apple. And so it just goes to show you that when you have a strong belief in a company and you've done your research, you have to look at that very long-term play. And you'll see that more with the rest of the 4 giants that we cover here today. Second on the list from this website is Bank of America, and you can see the percentage of the total portfolio is at 13.58%. That's at just over 1 billion shares, and a market value of $44 billion. So yet again, another significant stake in a company, and something that they've been buying into for many decades. And if I do a quick Google search on Bank of America and when Warren Buffett actually started to invest in them, 2011, Buffett began investing in Bank of America when Berkshire-Hathaway purchased in a private offering 50,000 shares of the company's preferred stock at a liquidation value of $100,000 per share. And while Bank of America is not the most exciting of investments, you can see that it is tried and true, been around for many years, and is a company that continues to pay out to their investors. Especially with the volatility that we're experiencing in 2022, you want to look for those companies who have been around for a very long time. And if we go to the max timeline for Bank of America, you can see that while they've had some significant downside over the years, especially with times in the market where banks get hit the hardest through financial recessions, that they always bounce back. Along those same lines, if we're going to the number 3 top holdings of the 4 giants at 7.49%, we find American Express. And it's going along the same theme as the banking or financial sector in a company that relies on credit card payments. And so yet again, another company or sector that you can look into that will always perform well when there's the potential for recession or significant downward volatility in the market. And a big reason for that is because a lot of people are living paycheck to paycheck, and when they get in times of need, they have to go to their credit cards. So American Express, 7.49% of the total portfolio, 151 million shares, valued at $24 billion. So it's just absolutely amazing to see when you start to see these numbers, but then you start to realize that the genius of Warren Buffett has been proven in today's market as well as over a long period of time. And that's the mindset you have to get into, is not for today's dollars that you put in, but for the long term, at least 10 years and beyond. For American Express stock, Buffett acquired his initial stake in the credit card company in 1963 when it sorely needed capital to expand its operations. Buffett has since been a savior to the company, many times over, including during the 2008 financial crisis. And you'll see on the historical price chart where in 2008 there was a significant downside to the price per share, but that was a great time to buy, especially if you're thinking about the long term. Let's go back to the max timeline. And let's look at 2008. And you can see that prior to that, 2007, July, $61 per share, dropping all the way down in that financial recession to $13. So a very significant slide. And with a lot of investors, a time that they would be nervous, anxious, and wanting to sell out. But not for Warren Buffett. That's when he looks for these opportunities in companies he knows will be around for years to come as a way to really make the most profit off his investment. And coming from $13 per share in 2009 to $193 per share, you can see that the all-time increase or percentage is 6,511%. So just a great way to continue to build your wealth. And many of you have probably seen this company, which is number 4 in the 4 giant list for the portfolio that Warren Buffett has led, and that is Coca-Cola, ticker symbol KO. 7.16% percentage of total portfolio. The number of shares, 400 million, valued at $23 billion. And if you go and do your own research out there, you can read about the strong conviction that Warren Buffett has had for many years in this company. It's been his longest standing holdings over the decades. And we can see here, just by a quick Google search, just how long that's been. Beverage giant Coca-Cola is Berkshire-Hathaway's longest held stock. It was initially purchased in 1988, and Buffett and his investing team have a cost basis around $3.25 per share. So we will look at the historical chart, but thousands of percent gained. And on top of this, being paid out a dividend in a very stable stock that has been around for many, many years. If we jump to the max chart and we go back to 1988, like that quick Google search showed, $3.25 per share is the cost basis. And over many years, 1998, $41 per share, quickly turning down over the next 5 or 6 years. And that would have been a time that people would have gotten scared and sold out. But not for Warren Buffett. Continues to add to his holding over many decades, writing out every one of the peaks and valleys, and probably looking at those opportunities when it does make significant dips to add more to his holdings. And you can see 9,422% all time as far as percentage increase in price per share. So that's why you want to think about the long term. Find those companies who have been around for a long time and continue to excel and perform. And find the ones that can be stable positions within your portfolio that can help to gain you massive and substantial wealth. So that's really what I wanted to focus on today. I would love to hear comments about similar companies out there or your thoughts on what I covered in today's video. And if you have positions in any of these companies, because if you don't, they are definitely ones to consider and look for those entry buy points, especially in today's market with all of the spikes and valleys that are quickly dynamically changing on the news, and any concerns or fears over the market or global state is really starting to impact and make a lot of fluctuation with any company out there. And so that's why you want to find those stable companies to be able to really ride out these spikes and valleys and build that path to financial freedom. That's all I had to cover for today. Be good, look for those opportunities, and don't just survive, thrive.